If you ever wanted to know how to day trade moving average the easy way, this video is going to be for you. My name is Pat Mitchell. I've been a professional day trader for the past 11 years, and I am here to bring you high-level professional day trading education, all here for free on YouTube and on X. And tonight we're going to be going over 3 specific trades that I took, all having to do with moving averages, some longs, some shorts. Let's get into it. I hope you all had a wonderful day. Give me 1 sec and we will fire up these charts. Let's rock and roll. Okay. 1 quick sec. Okay, so usually, and there still is, you will see, for those of you just joining us, these blue levels or trend levels, trend lines that are on the left-hand chart and the right-hand chart, but they are struck on the left-hand chart. These are our technical levels. And then at 9 a.m. East every single morning, I develop trade plans surrounding them, and we do not deviate from those trade plans. That's why you see the consistency that you do on this channel. Preparation is absolutely crucial. So today, there weren't a lot of these blue levels. You're going to see a previous close and a previous close. That was it. So basically a gap fill if it decided to make its way up. Now, what we also have, I'll zoom in real close here on SPY and a little bit closer on Qs. You're going to see these moving averages. So on Qs, the top one here is the 5 EMA, followed by the 9 EMA, by the 20 SMA, and then the 50 SMA. And then on SPY, you have the 5, the 9, and the 20. Those were the levels that we were mainly going to be looking at because that's where we were going to open. You can see that SPY had opened basically right on top of that 9 EMA. Now, remember, these moving averages move a little bit during the day, right? So it basically opened up right on top and just below. It was basically right on it on that 9 EMA. So you can't necessarily execute a trade there. There's no distance at all. You need to allow it to set up. So that's first things first. Then we have Qs. So Qs opened up below the 9 and the 5. And where it was going to open up was going to give us distance for a short. So if, and this was the trade plan, if at the market open, we come down and then come back up into those levels, we will execute the short. And on that, that's exactly what it did. Now, let me grab those entries. That was the, I believe, the 624 puts. That's it right there. So as it comes up, I am executing. Those are the entries. And then as it comes down, I am always paying myself into that first support area and morning lows. That's why you see the bulk of my exits happening right there. Very straightforward, standard issue type of exit strategy. So on that trade, it was a really nice trade. Ended up resulting, if you look at the price of the premium, in and around just below $2.50. It went up to just below $5. So you're looking at almost a 100% gain. Probably, if I had to guess, it's about a 75 to 80% gain on that trade from best entry to best sell. And that happens all within, that was about 16, 17 minutes of the market open. So really substantial trade, especially for that short period of time. So on that, these moving averages that we were dealing with was the 5 or the 9 EMA and the 5 EMA. Okay. And we were going to risk off of that 5 EMA. And a reset trade that we would have had was, if it kept going, we would simply stop out and reset up here at that gap fill. So very easy, straightforward morning. So now let's talk about SPY, because SPY was the really big one here this morning. Now, SPY was pretty interesting because, like I said, we were opening up right at that 9 EMA. So you can't do anything with it. So same as Qs, if it washes below, wherever it wants to hold, it holds. That's fine. When it pops back up, we can execute it. And we were basically working off of this here. So pretty tight risk. Everything's good to go. Execute, add, and then just work that trade down. Beautiful trade on that. Very substantial ROI on this one. My best entry on this was around the 210 mark. And then the best exit was at about 320, 325, somewhere in that area. So again, about a 70, 80% gain on that. Really, really nice. But this one, because of the amount of protection and the chart we were working with, I could accumulate more size. It actually gave me a lot more opportunity to get size in. Now, we're going to zoom in on this because this lesson isn't done yet. Okay, so I'm going to zoom in some more and stretch it out so then you guys can really see it. So where I got my ads, this is important. It's how it moves through those moving averages. And to be honest, this is more of the important part of this lesson. So this yellow line represents the 9 EMA on the daily. So like I said, we opened right on top. It pops, it pulls back, it shoots up. Okay, start in, add at highs, and then this is the important part. It slices back through. It completely disrespects that level. If you've watched my channel a lot, you'll know that I talk about that a lot. It's something that I look for in any trade that I'm working with a technical support or resistance level. So basically on every single trade, when it pops up, do you see how it comes and it bumps its head? It's retesting it. So anytime you slice through a valid technical level, it will, with high odds of success, come back and retest that. If it just sliced through and completely disrespected it, it didn't want that support, it will hold resistance. So again, I'm going to repeat that. If you slice through support, it disrespects that support completely. When it pops back up, it will retest that level and it will hold that. Okay, basically rejecting that previous support, now proving to be resistance. That isn't anything fancy. All that is pure technical analysis 101. Former support becomes resistance. Former resistance becomes support. Okay, that's all this is. I keep this very simple. And as I'm watching it, when it comes up and comes up, after testing once, test it again, I add. Comes up once, twice, because now I want to get some size in. On that third time, that's when I'm going to get my size in. And we washed hard, straight down to low of day. That was a really big wash candle. It doesn't look like it because of the range on the chart and it's not overly stretched out, but the premium was extremely nice. So, and you can see how it was working with support and resistance. So this was previous support. It rejected that support, slices through. When you slice through, you have to come up and you will hold that. So another opportunity there. I did not take that. Obviously, it already locked in a substantial amount. Good enough for me. Good to go. So there was one other trade. And if you guys give me 1 sec to clean up these charts, I will show you. And it was on Qs. Very quick trade. Now, on this, we have moving averages. We have the 20 SMA and then the 50 SMA. And I'm going to wheel back this chart because I do want you guys to take a look and see how these moving averages work with each other. So up here, it rejects the 5 and the 9. And when it comes down, comes all the way into the 20 SMA, there is a reaction. That is that trade, and we'll go over that in a sec. But take a look down into the 50 and then right at the 50. The 50 SMA has a different nature to it. The 50 SMA generally will not touch the level and bounce or reject. It likes to go a little bit before or a little bit below. It likes to overshoot or undershoot. Remember that. The 50 SMA, the 100 SMA, and the 200 SMA, they will all undershoot and overshoot. They rarely, and they can, but it is rare that it will touch that level. So on 50 SMA to 200 SMA trades, when you're going long, you have to size down when you're adding into it. And you need to start adding, and then you average into your trade. Because just because it breaks that 50, 100, or 200 SMA doesn't mean that that trade is dead. That's where risk strategy comes in. And that's why I have a risk strategy, because it keeps you safe and it keeps you in the trades just long enough. Like, how many times have you been in a trade where you take that trade off just to have it come back up? That's because you don't have a proper risk strategy in place, something that's been developed over years and years and years. It's one of the bonuses of having a coach, to be honest, especially if he or she has been in the markets for a long period of time, such as me, 11 years plus now at this point. So the 50 reacted, the 20 react. Well, first we should go back. The 9 reacted, the 20 reacted, and then the 50 reacted twice. Every single moving average, moving average, moving average, and moving average all gave sufficient opportunity to profit on the day. This isn't magic. This isn't some sort of mysterious fucking rare unicorn. This happens all the time with high odds of success. So locking in a nice small trade, just a small trade, because I had already locked in a substantial amount, just simply taking the opportunity, and that is it. Executed coming down into the 20, as you can see by the blue triangle. And then as it pops up, I pay myself into that previous support, which is right there. Technical analysis. Easy peasy, guys. So moving averages are a very sound way of executing trades if you open up inside of that channel between two moving averages. Okay. Speed, distance, that all matters. There's more to it than just executing that moving average. You need a strategy based around it, not just an idea or a setup. What I'm telling you is a lot of setup. It's not full strategy. Strategy isn't just an entry, how to enter. Okay. You need an entry strategy, exit strategy, profit strategy, risk management strategy, sizing strategy, and so on. All of that combined creates a strategy. It's not just about entering. Every guy and their dog out there will sell you an idea of a strategy based off of entering. That is about that much of what real strategy is. And most people, they get confused and mixed up between setup and strategy. Those are two very different things, very different. So if you want to learn how to come do this and learn professionally and have a real good chance at a career at this, come to tricktrades.com. And if not, there are 1,500 free videos on my channel for you to sift through. It's just going to take you fucking forever to do so, but that's on you. There's an easy way and a hard way. That's up to you. So I hope you all have a wonderful day, wonderful evening, no matter where you are. And we will see you guys tomorrow. Head over to tricktrades.com. Come check us out. What do you have to lose? Adios.